Let's be real. There are months I save faithfully only to realize that the money I have saved is not able to buy half of the things it used to buy. I'm sure I'm not alone, and I know you probably have experienced that. You go to the market with 100k, 150k, and it feels like your money is disappearing. Why? Because you've not finished buying the things on your list and your money is gone. Listen, the truth is you're not careless, and neither is your money just disappearing. But there are powerful forces that affect the purchasing power of your money. Things like interest rates, inflation, exchange rate. But once I understood how they all connect, I started making smarter money decisions. That's why I always say that financial literacy is the best form of scam-proofing your money. Welcome to Most Brave, where we break down finance into simple, practical steps. My name is Mara. Do you remember when 10,000 naira could handle a whole week of groceries? Now, 10k is not worth a trip to the market. Why? Inflation. I did a video on inflation. You can go back and watch it where I explain how this affects your pockets. What is inflation? Inflation is rising prices of goods and services, reducing the purchasing power of your money. Today in Nigeria, inflation is still above 20%. Except if you're investing and earning higher than 20%, you are technically losing. That's why I realized that keeping money idle in a savings account is just like you giving away your money. Now, instead of allowing inflation to eat your money silently and slowly, knowledge allows you to recognize that and to put your money in instruments that can fight back inflation. The great force is interest rate. The two-edged sword. Someone would look at treasury bills now that is at 16.78 and say, wow, the rate is not bad and it's safe. Well, it's actually not bad. But when you compare it with inflation, which is at 20.12%, you realize that NTB, even though safe, is still lagging behind. The simple definition of interest rate is what you pay for loans and earn on savings and investments. What is the relationship between interest rates and inflation? So when inflation is high, CBN raises interest rates in order to reduce inflation. When CBN increases interest rates through the base rate, which is the MPR, I also did a video on MPR. You can go back and watch it to get clarification. When CBN raises interest rates, borrowing becomes more expensive. However, savers on the other hand, or returns on some instruments also gets better. Instead of being discouraged, start combining these instruments. You can do short-term T-bills for liquidity and then longer-term bonds for stability. At least your money is not just sitting idle doing nothing. The lesson here is that interest rates might look very attractive, but without knowledge, you might settle for returns that are way lower than inflation. So financial literacy makes you knowledgeable enough to make informed decisions. The third is exchange rate, the hidden link. If you've priced anything in dollar in the last 2 years or so, and you look at the price now, the price might not have significantly changed, but your naira value has doubled, if not tripled. Why? Because of the exchange rate. Exchange rate is the naira value against dollar. When exchange rate was 500 or 750 to a dollar, which was like 2 years ago or so, that same $1 now costs about 1,500 naira. You can see that it has clearly doubled. In fact, beginning of this year, it was as high as 1,700. And the thing is, Nigeria is still an import-dependent country, even though we're fighting back and hoping that that is going to change anytime soon. But what a weak naira does is that it pushes import prices up, especially when you also settle some things in dollar. For those of us that settle things in dollar, as in you buy things or you import for your business and all of that, it is also wise for you to realize that you just making all your investments in naira is you exposing yourself, especially if you have dollar payments to settle. It is wise that you also make some investments in dollar to hedge against interest rate fluctuation and generally to limit your exposure. Exchange rate swings is another way an economy can suddenly drain wealth. But for some time now, exchange rates have been hovering around 1.5 or so. We're thankful to God for that, and we hope that the stability continues. Because when exchange rates are stable, people are able to plan, people are able to organize their businesses, manage their expectations. Let's just do a quick recap of the relationship. When prices rise, in quotes, inflation, CBN raises interest rates in order to control inflation. Higher interest rates, on the other hand, can attract foreign investors, which can be used to strengthen the naira, thereby stabilizing that exchange rate. But if naira stays weak due to import or oil issues, prices go up again. Let's look at an example. Inflation is still at 20.12%, right? Interest rate is still high. In fact, MPR is still at 27.5%, and the latest treasury bills is at 16.98 or so. So that means return on investment is not bad, but because of inflation is still at 20.12%, and you can see that things are still relatively expensive. Everything is sort of connected. Knowing and understanding how all this connects will help you to make informed decisions, like I said earlier. And how do you do that? One, mindset shift, very important. Stop seeing interest rates, inflation, exchange rates as forces that have come to destroy your destiny. Look at it as signals to help you make smarter money decisions. When you're saying that CBN is trying to control inflation by raising interest rates, and you know that on your savings you're going to get higher returns, what do? You move some instruments. For short-term safety, treasury bills are still good. Treasury bills, money market mutual funds. Why? Because treasury bills is the safest form of investment. It's considered risk-free because it's you lending to the government. For short-term, you can move some money to treasury bills for liquidity. For stability, you can look at longer-term instruments like FGM bonds or other A-rated bonds that would give you higher returns, because what you're trying to do is to fight back inflation. For the longer tenured instruments, they tend to give higher returns. For growth, you can now move to equities. The equity market in Nigeria now is doing so well. You can move some to equity for growth, and of course, please, you should do that through a licensed stockbroker and get financial advice from professionals. You can also look at real estate. Now, real estate tends to beat inflation by a very high margin. Then for hedging, you can also look at dollar investment, especially if you have settlements to make in dollars in the future. It's very advisable that you don't put everything in naira. Also make dollar investments that will give you returns in dollars. You're not only getting returns on that dollar investment, but you're also hedging against the naira depreciation. For me personally, I don't try to outsmart the economy because these things, there's a way they all connect. What I do is I build a strong mix that fights back inflation. And how do I do that? I just explained to you. You have a mix of all these instruments and all these different kinds of investments, each with what it's helping you to achieve. Like I said, knowledge helps you not to fall victim to options that look so easy but might bite you in future. It also helps you not to leave your money idle. While inflation might bite in here, you're fighting back on the other side. At the end of the day, you have a balanced portfolio that you earn higher than inflation. Basically build a money shield. When you learn and understand how it works, you can boldly say that no matter how the economy turns, whether inflation is this or that, or what interest rates are at the moment, you're able to make smarter money decisions, and it builds financial confidence. Don't feel discouraged and think that your money is just disappearing right in front of you and you feel like there's nothing you can do. There's actually something you can do. Make yourself financially literate. Understand what these things are. And there's nobody that knows it all. We all started. If you create time to learn about these things, to understand how it works, I can guarantee you that it will help you in making smarter money decisions. Now, if this episode resonated with you, or you learned something, or it reminded you of something, or you know anyone that can benefit from this video, please share, subscribe if you haven't done so. I'll see you in the next video. Take care and remain financially fabulous. Bye.